Hey everyone, welcome to Anti-Ruggers United. We have an AMA with Numisme, or Numisme. So let's get started by having the team introduce yourselves. Tell us a little bit about your history, about your experience in the real world in crypto, like how you got to this point with this project, how basically how you got the team together, like where's everyone from, and just to kind of know a little bit more about you, and then we'll go from there.
Yeah, no, sounds good. So I'm Mister. Thanks for having us, by the way. We're super stoked to be talking to you, talking to your community, hearing stories of you putting the rug out in front of ruggers. But yeah, so my background is I come from Silicon Valley, so big tech has kind of been my career, right? And I pulled the ripcord on that career a handful of years ago, right around DeFi summer, actually. And right before DeFi summer, I started getting really big into DeFi, right? Been in crypto since 2016, really got interested in the mission that DeFi is building towards, which is to create a more accessible and a more just, a more fair financial system, right? Being able to give folks access to financial products that really have typically only been reserved for the wealthy or the folks with connections. And it kind of like all just gelled for me with just the inability of big tech and really most tech to deliver on the ethos of do no evil, do no harm, right? To build for a better future, right? This is stuff that I was raised and trained to believe in, and the more I just saw it, it's just not true, right? And so I found DeFi, and since then I went head in, rotated full into crypto, and just been learning and building since 2019. And most recently, my experience has been to bring my marketing skills to the DeFi space, and even more recently, to lead a project, a previous project. It's called Y-Axis, and now I find myself at Numisme, thanks to Misam, and that takes us to kind of how we all came together, right? We all were essentially originally community members, right, of a different project. We all came up together, we contributed, right? We gave what we could according to our skill set, and eventually kind of became team, right? Became the folks, the core contributors that were running the project. And that, I think, just kind of reinforces why I'm in this space, because that is just so equitable, right? It is so fair, and it doesn't matter what you look like, what you sound like, what your name is, what your background is. If you can do what you need to do and you can deliver and you can execute, that is all that matters, and you should be incentivized to contribute in any way that you can that helps the project, that helps the community. So Misam is the founder of Numisme, and Aaron was a community member as well, and we brought him into the community manager seat. But maybe I should let them introduce themselves. So enough about me. Misam, did you want to say a few words, or?
Oh, hi guys.
Yeah.
I'm here sparingly. I'm kind of working on a couple of meetings at the same time, but yes, as needed, I'll jump in. Thank you for having us. Glad to be part of this AMA. Just a little bit about me is just we came up with this idea, and I have a background in finance, banking industry, and so it's always about helping people and creating an environment of, as Mr. Mishra was saying, creating a system that works actually better than our centralized setups that we have in traditional markets and stuff. So learned from that, grew out of that, and then at some point in time got into crypto and realized the potential here of what smart contracts and cryptocurrencies, and if a project is built right, where ethics are at play, integrity is at play, and trustless systems can be created, and it can lead into a financial breakthrough where you and I and everyone else can truly start benefiting, and get into a point where we've built something that allows you to be able to enjoy life, smell the roses, and not be terribly worried about money or stuck in a 9 to 5, 24/7, which is the current condition of humanity. So that was the vision, and we'll speak to it a little bit more as we go further down, as you see what we have built, are building, and what the overall vision is. But again, yes, thank you for having me. I'll give it to Aaron.
Hey, Boria, thanks for having. Thank you too, Mister. I'm a community lead over at Numisme. I fell in love with this project immediately when I heard about its use case. Building an app that integrates with the real world and connects them with crypto is, I mean, honestly, it's essential when we're moving forward into like mass adoption. So this project has so much going for it. I fell in love right away. I got really passionate about it. I jumped right in. I got into crypto probably, I guess it would have been the Doge craze, like like a year before spring, back in 2022. Been aware of it for a while, probably several years. Never really got into it at the time, but I was looking for something different, and I was even studying for like medical coding at the time. I'd been doing that for like 3-4 months, and I just like decided to throw it all down and just jump into crypto. So I've been involved with several projects since then. This is probably the best and brightest of them, not gonna lie. It's really fortunate to be a part of a project that's this legitimate and this long term in its vision and with this much use case. But most of my experience prior to the crypto was the service industry, and I'm a people person. So that's been a great way of connecting with everybody in this space, because I mean, crypto ultimately is made up of a bunch of people, and luckily the way I look at it is it really feels like we're kind of all sharing some similar values here. Like I find that a lot of people have a very real sense of the world around them in the crypto space, because we're all trying to get away from the problems that exist currently in the real world, and also create an alternative space. So yeah, just happy to be a part of everything in the space and in this project.
All right, so I see that you guys have the team that you talked about on here, right? So from my understanding, is there any KYC or docs for anyone?
As far as team members, yes.
Yeah.
Go ahead.
Who's KYC docs? Because based on this, it seems like you guys are not doxed, right? There's no like public info, like social media links or anything like that. So I'm just wondering if you guys are doxed or KYC'd, and KYC with who?
So we recently went through a merger with a previous project, and so the team that came over, including myself, we have been anonymous since the beginning. So like myself, I'm not doxed, but the core team from the Numisme side are all fully doxed. I guess we didn't put any of that docs information onto our documentation, but it's Misam, right? That is his real name. We have Jay, we have Reza. They are all doxed. Aaron is doxed as well. But folks like myself, our other community manager, Mr. Pappy, we are anonymous, and the plan is for us to dox ourselves, but we wanted to kind of withhold that as kind of a marketable moment down the line. Once we have our community up at a certain size and we have enough awareness around us, we have a bunch of plans for things like not just doxing ourselves, but to mitigate our dilution, right? The inflation that folks are going to be experiencing as we bring tokens online onto market. And so essentially reducing our total supply down the line. But we're kind of saving these kinds of moments as milestones, as something we can market against, right? We do the big reveal, do the big token supply mitigation event.
Okay, all right, sounds fair. And can you tell us a little bit about the history of the token, or better maybe just introduce the project. Just you can do the sales pitch.
Yeah, sales pitch. Well, Aaron kind of got ahead of it a little bit. He gave you guys a preview, but essentially at a high level, what we're doing at Numisme is we are trying to make the first DeFi project that brings real world utility to a token. We are going to be the first to actually bridge the DeFi world with the real world, right? So what we're doing is our core IP lies in our ability to digitize the loose physical change that you get back from whenever you purchase something with cash at a store, right? So when you hand the cashier, or you go to the checkout counter or the automated kiosk, and you're buying groceries, for example, and your groceries cost like, say, $15, right? We'll just use US dollars as an example for now. But you give them it costs you $15, and you give them a 20, and they give you $5 back in your hand, and then you put that in your wallet, right? Maybe they give you a few coins and you put that in your pocket. What we aim to do is to be able to digitize that physical change that you would get from the cash register, and have the store, the merchant, essentially our retail partners, have them scan our app, the iOS and Android app that's in development, and bring that cash into the app, right? And from there, the plan is to onboard these folks into the world of crypto, and ultimately into the world of DeFi, right? Because once that cash is in their app, they can use it however they want, right? They can send it immediately back to their bank account if they connect the bank account. But really what we're hoping is that they use things like our DeFi savings account, that they use, that they stake their NUME, that they purchase NUME, for example, right? And that is the ultimate vision for Numisme, is to be able to not just bring DeFi to the mainstream consumer, the folks that have maybe never heard of crypto, or maybe the folks that have heard of crypto and never used DeFi, or the folks that are kind of just, aware of all of this stuff, but not really comfortable with all the complexities that are in the DeFi space, all the language, all the concepts, right? We want to bring them into DeFi, right? And we want to make sure that we can open up all the utility that's built within this walled garden of DeFi right now, and give them access to it. Right? Because that's really the only way that crypto survives. That's the only way that DeFi certainly flourishes, is to be able to go out and go truly mainstream, right? Beyond just token speculation, to be able to actually use our technologies in the real world. Otherwise, we're just playing in our own little sandbox, right? So that is the ultimate vision. And on the way to getting to that vision, right, along our roadmap, we're focused currently on building out our yield engine, right? We're releasing the products that generate the yield, that generate the interest, essentially, against all the digital assets that you might be holding in your wallet. We're building all those products now and launching them now, so that we can be able to make our mobile app give all that APR, give all that interest rate, give that yield back to just the regular consumer.
Yeah, just to jump in, when he says digitizing your change, guys, like, it's not just the coins, it's all of your change from a cash purchase at any participating retailer. So don't think of it as just like some sort of roundup mechanic where like you're gonna be saving up 12 cents at a time. No, it's however much you want to put in. And the great
that's
thing
a really
about
good
that,
point, Aaron. Like if it costs $15 and you give them $100 bill, then you can bring $85 worth of that change into the app.
yeah, as much of it as you want. Which is the important part about that, is that unless you're connecting it to a bank account, there's no KYC. So you can bring as much cash purchasing power from your cash purchases into the app and into DeFi seamlessly. So this isn't gonna, it's not gonna be something that you can kind of save, your pennies towards for something, a late honeymoon 30 years in the future, guys. This is a real way of saving a good amount of money. Anything that's going to be left in your pocket after any of your spending habits.
If I can interject a little bit also, something, since we're on this point, a couple of things that are important is that, one, the concept of paying with physical cash and getting your change back, not physically, but instead choosing to get it back electronically. It's still in cash. It's not being digitized into a crypto coin. It's just a POS transaction where you're paying with cash and you're getting the funds back instead of physically handed to you, but instead electronically sent to the app. And from the app, that is your choice to move those funds back to your bank account, or from the app, it is your choice to leave it in the app and use the maybe inbuilt debit card to make new purchases, or of course, where we're giving them the option of jumping into DeFi and being able to purchase the NUME coin and guiding them and showing them incentives of why this is a good idea and educating them and all that good stuff. But the concept of paying with physical money and getting it back electronically, that is patented by us. We have a patent pending on that concept. So not only is this a play on being able to bring in retail POS point of sale markets and give DeFi a real life situation so that it's not so dependent on Bitcoin and market fluctuation, and the project has a base system in which it depends not only just on the markets to a certain extent, but also gets the benefit of the inflow from the retail market. Now, that concept of it does not only affect help the project, but there's also a real life case issue where we're in talks with big box stores, and those big box stores are seeing the value of what we won't need to even manage cash registers anymore. All our cash management expenses will eliminate. It's market 2.0 and an evolutionary look at where the market is already going. And we hold that concept in our hand because now they can take in cash all day long and do not have the need technically to give cash back. So there's no need to maintain a cash register or shift changes, counting the money, buying new rolled quarters, coins, dollar bills. All will be a thing of the past because there's no need for a cash register to begin with. So not only does it have an impact on the app, the crypto, the DeFi market, it actually has a real life billions of dollars saving impact for big box stores. So that's what the greed factor is for the corporate side of the world too. So I just thought that I would just add that clarification. Thank you.
That was excellent too. Hey, peer-to-peer transfer too, guys. That's another feature. So everybody really has more choices than they've ever had before. They can connect it to their bank. They can do peer-to-peer. Meesem drop the concept of the debit banking cards in the future, and they can buy crypto. Or they can just let it sit there too and accumulate. So we're giving people choices they've never had before, or rather, we're giving them more choices than they've had before as far as a financial tool.
All right, so you guys are doing a lot of utility, right, with the real money system, but that is definitely a difficult road, right, to take, because even now at the steps we are now, even the major crypto exchanges like Coinbase, still got, especially in the US, it's a lot of hoops you got to jump through, right, to like take cash out and all that, and also with the government and taxes and all that being tracked. So I'm kind of curious. Maybe let's go over like each of the utilities you guys have one by one, and kind of like just talk a little bit about each one. So this is the first one, right? You guys will have a savings account with super high interest rates. So you just deposit your tokens in there and then start earning. So this is like essentially APY type of thing. So how would you generate the interest rates? Because the way the banks do it is they invest their money and then they make money off of investments and they pay as interest rate, right? But of course they pay low because they invest huge amounts of money, and you can't like 2x, 3x, 10 billion, $100 billion, right? You got to, even 1 or 2% a month is crazy or pretty damn good. You know, like in the real estate market.
So they're in they look at it in terms of risk mitigation, right? And they are comfortable eking out, low single digit interest on their investments that they make with your money, right? So that is, I think, speaks to not just the amount of work that goes in, but just all the operating overhead that a bank or an investment firm has to deal with. And layer on top of that the need for those organizations to be able to satisfy their shareholders, right? You got to continue to deliver profits every quarter, as well as the crazy high executive compensation, right? The greed factor. So the banks are basically keeping all of the profits for themselves while they pass through like 5 or 10 bips, like, I mean, 0.05%, or maybe if you're lucky, like a 0.5% interest rate on your cash that you deposit with the bank. We essentially are building an alternative system to the bank, and we use all the same principles, the same financial principles. We may use different words, and we may refer to it more as yield than APR or interest rate. But the way that we earn the way we generate that APR, the way we generate that interest on tokens is for example, with the DeFi savings account, we take your stable coin, right? The tokens that are pegged 1-to-1 with the US dollar, and we deposit them into our yield engine. And that is comprised of our vaults, right? So our vaults are able to take, say, a stable coin and use non-custodially, we're able to route those assets into other DeFi protocols and really basically farm the entire DeFi stack to generate that yield in the form of other rewards tokens. But the way we do it is we take those rewards tokens that a user's funds have generated and we harvest them. What we do when we harvest those rewards tokens is we turn them into the same token that was initially deposited, and then we add those tokens. That, let's just say it's a stable coin, right? We take those rewards, we turn them into stable coins, and we add more stable coin to the initial deposit of the user. So what we're doing is we're compounding the earnings right back into the user's initial deposit amount, so that grows, and then we sprinkle NUME token on top, our native token, NUME, the NUME token, and we give that as extra rewards, and that increases the APR, that increases the interest rate that you can earn on your assets. And the way we look at generating interest is with everything we do, not just with smart contract security, not just with user experience, but also even maybe most important is the safety and risk mitigation considerations for how we generate the yield. We make sure that the protocols we use are healthy, that their books are healthy, they don't have any or too much bad debt. But we certainly look at other ecosystem risk factors like depeg risk and what just the overall market is doing. And because we take a really considered approach, for example, we recently delayed the launch of our vaults because of all the fallout from the Luna, right, UST Terra depeg. We paused the launch of our vaults to reassess and just make sure that everything we were doing is safe. Everything that any of the protocols we're using, that they are in a healthy position, that they're not at risk of a depeg, that they're not at risk of under collateralization. And we came to the realization like, hey, okay, our initial thesis is sound, we can launch now. So we launched, and we've been generating yield for, I would say, how long has it been since we launched our vaults? Maybe something like 4 to 6 weeks. But we've been live on the token since the end of March of this year. And I should just add, because of the way we look to generate yield, we can generate positive yield in any market condition, in a bear market, in a bull market. While we can't control the volatility of the underlying asset, for example, if you deposit ETH, we can't do anything about the ETH price going down, and that would reduce your portfolio or your deposit value. But what we can do is ensure that you're earning positive yield on top of your ETH. So I hope that answers your question. I know that was a lot of words.
Yeah.
Yeah, and for the clarity, that I just want to reemphasize that that's already live for those of us that are DeFi savvy. The strategies are already working and creating yield, and it's a triple audited project on security side of it. So that eventually, what you were originally asking on the app side, so it'll just be something that will become in app mode as well. For those who are DeFi savvy, the vaults are already live and people are already interacting and bringing assets in, and the contracts are trading them.
Yeah, and we just crossed over the 1 million TVL threshold. That was a big milestone for us, and we're quite proud. So I thought I'd add that in there. Sorry, I know that wasn't part of the question.
About to hit 1.2.
About to hit 1.2. Let's go.
Let's go.
All right. So your guys' app, or is that out too? The actual app itself?
Our Web3 app is live on app.numisme.com, but our mobile app, we actually had it live on both iOS and Android, but we removed it because the vision of Numisme changed quite recently. And so the app was no longer fit our mission. So what we've done is we've removed the app and we've taken it back into development mode. And so we are currently developing the mobile app.
Okay, I see. So how will you plan to accomplish this one with the merchants, with the cash, with the banks? Because this is the one that I'm curious about, where with the DeFi, with crypto, with iOS, because I feel like there's a lot of hoops you have to jump through.
There are a lot of hoops, and it is a very complicated product to build, right? The mobile app itself, we're benchmarking a user experience that's similar to a Venmo or a Cash App or a Revolut, even simpler than Revolut, in fact. But the simplicity and the ease of use of the app doesn't really speak to just how hard it is to build it. And make no mistake, it is a very complicated product. And in order for us to pull it off, what we're doing is we're working with so many different partners. We have our retail partnerships, right? All those conversations, as Misam mentioned, with big box retailers and travel and leisure chains. We can't mention any of the names just yet because NDAs are in place. We don't want to put any of these partner conversations at risk. I was getting a little echo there. But we're also working with crypto and fiat rail partners as well, because one of the things that I think that you're speaking to there, Boria, is the need to be compliant, right? If a user wants to connect their bank account, or they want to move money back to their bank account, or just the fact that we need to be able to help transport this digital fiat, that all comes with, you're 100% right, that comes with compliance and regulatory considerations. But the good thing is we do have partners on board that we're working with that can handle all of that, and then the way we build the product will help us navigate that regulatory framework for us.
Okay, all right. And do you have an approximate date or benchmark when this will be up and running?
So we don't have a date for the mobile app, just because we.
Hey, Mark, can you mute your mic? Thank you, brother. Thank you. Right in the middle of an AMA.
By the way, I think we lost him.
I'll speak to it. So we don't have, and he'll probably jump back on. We don't have a specific timeline. We don't like the idea of giving a specific timeline, what I mean is a date of when it is coming. It is in development. To simplify a little bit more of your question, just to get an idea of it, is one of the big box stores, no names, but we were just looking at some studies, was saving them about 13 billion annually. In cash management costs. So no matter how hard or how easy it is, the savings for those big box stores and structures is too enormous for them to not want to create a solution where someone can pay with cash and they not have to give cash back. Instead, they give it back electronically. So there's many other interplays into that setup. But so, like as Mr. was saying earlier, that we've got to have our POS partners in place. We've got to have the tech so that it can speak to each other, so that you can just walk up to a grocery store and pay with. If you paid with a credit card, you take your receipt, you leave. The end, no big deal. But if you paid with cash, and especially in other countries where cash is even more used, if you paid with cash, the POS system will know and have an input option that they can, the person can say, hey, can you Numisme me? You know how we say, can you Venmo me or Cash App me? Then they can say something like, can you Numisme me? And that would just mean that you'd raise your app and the barcode would, this is all in development. So the barcode would be scanned, and then at $38.99, instead of physically being handed to you, and that change just being thrown in your car and never being used again, would still stay part of your net value and go right into your app. And then from your app, as we discussed earlier, you'd have those similar options. One of them is the banking relationship, so that your something like Plaid would be able to connect your bank account into the app, so that you can move money back and forth that way as well. Peer-to-peer, send anyone else who has the Numisme app funds like you can in Cash App. And and of course also interact with our DeFi version, where all of the pro DeFi things and the vault strategies, it's already live, those things, and then more things coming in development. They will kind of sort of link in on a Web3 setup, so that you can buy the NUME coin and then use those NUME coins to stake into that environment, or into that quote unquote DeFi saving account. So they'll connect together. So all of this is at play. The reason we can't exactly say, hey, it's this many months out, that is because we've got to get all of those connections in place. We initiated, I think, the process of, like, the utility patent. I think it was back in 2019, and so since and then eventually development, and we did create a app, and so now we're just building on top of it. So a lot of the work is done. Now we're just finalizing all the different interactions that need to be there, do some beta testing, and then when it's fully functional, then we can bring that to life. But in the meantime, it's not like the project's not doing anything. It's completely dependent on the app going live. In the meantime, for those of us that know crypto or DeFi, they absolutely can go to our app.numisme.io, connect their wallet, and input into the vault strategy, and input into and start earning yield LP products. And there's a couple of cool things that we're doing in DeFi that no one's done before, like LP double up. I'll let Mr. Mister, if he's back, let me know, Mr. Mister, if you're back, and I'll let you have the lead on these. Those and then also staking your NUME, and instead of staking your NUME, and instead of earning anything else, earning ETH. But what normally people, when they get their rewards, they want to dump the rewards, and that hurts the project. So we've looked at all of the different things that DeFi wasn't doing right, in our opinion, and we've kind of like closed those circles out. Like, hey, yeah, if you've earned your sprinkle of rewards of NUME coins, we don't want sell pressure on it. We'd rather you stake it, and in return of staking your NUME, you will actually earn your rewards in Ethereum, and do what you like with Ethereum. Completely different change, and it doesn't hurt the project at all, because now there's less and less sell pressure and more stake product. So, and I'm going all around the place a little bit of this, but the point is, to answer back onto your question, it is in development. Everything is going beautifully. We have to plan that correctly. But in the meantime, all the DeFi products from the Web3 side of the world will continue to be taken care of, and continue to be built on top of that. Like our Pay Me loan is coming out soon, and Numisme Pro's versions are coming. So those things will still continue. So there will be all kinds of DeFi avenues live on it and well established. And then at the right time, when all those connections are good, then the retail options will also go live.
Okay, all right. By the way, I wasn't asking for like a specific date. I want to kind of get like a ballpark, like let's say 3 months, 6 months, just to kind of get a rough idea of the progress of your roadmap.
Yeah, I'm. Don't quote me, but and I'll probably get in trouble from everybody if I gave you. But I'll just say some months away.
Okay, so it's not.
Yeah. Hey, sorry guys. I was talking. I don't know how I got on mute, but yeah, I don't know how that happened. Sorry guys. Yeah, it's on the month scale. It's definitely on the month scale. It's definitely more than 3 months out.
Okay, cool. So it's not maybe not a year, but it's not 3 months either. So it's somewhere around there. So
Exactly.
There we go.
Exactly.
all right, awesome. All right,
How
okay,
long
let's
have
go.
I been on mute?
Since you last talked.
I've been talking. I've been trying to talk. I thought I was talking this whole time, but okay. Anyway,
Yeah,
I don't know
Mr.
how
I
that
picked it up a little bit. I hope I didn't say anything wrong, but I picked it up a little bit and kind of shared what I
You
could.
did, and I was wondering
Yeah,
why you were ignoring
yeah,
me.
he told me your
but
address.
I'm on mute.
Yeah.
All right, awesome.
Welcome
Okay,
back.
so you guys will have the app in development. It's going to be you're trying to bridge the fiat with crypto with DeFi, right? That seems like that's like the main goal of this project is kind of like provide users easier access to withdrawals to get cash in and out. Kind of like you said, like person to person, sending cash like a Venmo, but you could send crypto, sending tokens, things like that, right?
Right,
Yeah.
we're trying to make it so that crypto and DeFi are as easy to use as Venmo, right? Because again, there's almost no point in us building all of this DeFi infrastructure as an ecosystem, not us as a project, but the DeFi ecosystem. There's almost no point building it if the only use cases are for other DeFi users, right? The goal here is to build an alternative financial system, is to build financial products that folks that maybe they don't even have a bank, or maybe they don't trust banks, or they're just tired of the banks taking advantage of them and giving them just basically the crumbs left over after they pay themselves $100 million salary and they pay their shareholders, right? It's that we're trying to fix. And so the only way to fix that is to bring that real world connection into DeFi. And so, yes, at a really high level, that is exactly what we're trying to do. We're trying to bring crypto into the real world.
Okay, perfect. All right, guys. Honestly, I like the scope of this. It seems like it's a pretty big project. It's going to have a lot of moving parts. A lot of things need to, be done. It's very complex, like especially with regulations and in the U.S. Some countries are not as strict as in the U.S. So let's go. I want to go talk a little bit about the history of the token itself because it's been launched for a while, right?
Mm-hmm.
So I want to go over kind of like where we at, like basically where it started up to the point where we are right now. So I'm looking at the supply, the total distribution, and I see get treasuries 38%, private sale 3%, dev team 5%, app development 10%, marketing 10%, early investor 7.5%, ecosystem 20%, and operation 6%. So the only one I see that looks like it would be some kind of raise would be the private sale and the early investors, right? So you guys did not have any pre-sale, or you maybe call this the pre-sale, the early investors, right? Can you explain maybe a little bit about all the numbers for these two raises, like how many tokens or how much BNB or Ethereum in this case was raised for not for team, for private sale for early investors? What kind of discount they got versus, like, let's say launch price? Just kind of give us a little bit of a little bit of rundown. I think you muted again.
I can't hear him. But
Okay.
his mic doesn't look muted. That's okay. I can talk a little bit about this.
And I can too, Aaron. So after
Sure.
you, I can clarify.
Yeah. As far as like the private and early investors, them as well as the team developers, founders, they're all vested out 2 years. The first year they'll get 25% release. Second year they'll get the other 75%. So you can tell that they're obviously long-term investors, believers in the project. They got in. Let's see, the early private I think was 3 cents, and we're sitting at about 4 cents right now. So as far as getting in at a price similar to that, I mean, this is actually a very good time for people who were interested in a long-term investment, but as far as relating it to early investors. Misa, why don't you go ahead and jump in?
Yeah. Okay. So the early investors, basically, all those coins, as Aaron was saying, they're all locked, all on the blockchain under Unicrypt. And not even no one has any coins like that. Everything is locked on that cadence where no one can touch it. And after a year, the smart contract will release 25% of that amount to those investors. And the intention is for those, we know all of them and everything, for them to stake all of those. But the point is, after that, in year 2, then they get the remainder of it all locked, all on Unicrypt, all visible. And then there's that a little bit of the private sale side of it. We wanted to raise a little bit, same amount of money or something, raise a little bit of money so that we could capture Ethereum to launch the liquidity pool, and so those, that all and every bit of that Ethereum was taken and then locked in to the LP position, which is also locked for the whole year. So that's how safe and protected our project is, that even the Uniswap liquidity, the protocol owned, those funds are used to launch it, get the coin live, and every bit of that is locked on Unicrypt, so that there can't be any market manipulation. No one can rug anything. No one can sell anything. All on blockchain. If those are the two aspects of those sites. Everything else that you see over there on, maybe I'm going ahead, whether it's ecosystem or this or that, are all on big multi-sigs, so that there's no one person that controls any of it. Everything is properly discussed, understood, the ethics of it and the correctness of it, and then any kind of correct moves are made based on that.
And we launched on March 30th with like 250 Ethereum was what got put into that liquidity pool and then locked up for a year. And yeah, our launching price was, what was it? That was 5.7 cents. And then let's see, launch day went up to about.
Is the DEX tools, is it not correct?
Yeah. DEX tools is incorrect. Yeah, if you go into defined, I actually, in all of the resources that I give for charts for the project, I make a note of this. I actually spent like 4 or 5 days inside of their Discord server trying to get this resolved, but they just didn't seem like they either wanted to fix it or it was just something it just didn't matter, I guess. But yeah, I've heard that DEX tools does this a lot, where it like launches double what the actual starting value was. So the price, yeah, that DEX tools chart is not accurate, but the defined one is.
All right, let me see if I could go load up a different one. Can you post another chart in chat, the one that you said is correct?
Yeah, I'll post it right now.
I'm trying to load up DEX Screener. Well, DEX Screener seems it's agreeing with DEX tools.
No, try define.
Right, yeah, define.
All right. So let's see here. So I have DEX Screener. Let me see here. So this one seems it's about 16 cents. This one's also about 11 cents. So these don't even really agree. So the price had to have been this high at one point, right? So what's missing on this chart? Did you guys launch lower and then it spiked up and then it dropped?
Yes, right. We're not sure where all the interest came from, because we actually didn't do any marketing on launch. But the best we can figure is new liquidity listing, and you've got a lot of speculators coming in trying to, get in on the new launch, right, hype. And so we did see some really, really healthy price action early on, but the market hasn't been able to sustain that. We all know how the market's doing as of recently, so yeah, that kind of explains the spike.
Yeah, there's a few million in volume on launch day.
All right, okay, I see. So yeah, it looks like the you guys launched around here, but then it spiked up to there, and like probably got sniped, and then sniper sold immediately, and then it went back down.
Yeah, not
So
immediately, but yeah, pretty much came right back.
okay, yeah, it's not. So it's not currently. It's not too far off from launch price. So launch price was around 5. You said the private sale guys got 3 or so, but they're still vested. And what about these guys, the early investors? What price did they get?
Yeah, that was 3 cents.
So these guys and the private sale got 3 cents.
All private early investors. Yeah, that was the
Okay.
price on that.
So they're all
So
still
we're
100% vested, right? For at least, you said it looks like, okay, a year,
2 years.
25%, and then
Yeah, 25 at 1 year exactly.
all right. So all right, cool. So if that's the case, then it's still slightly going below launch price. So none of those guys could sell. That means that some of these other wallets had to have been selling, right, to lower the price below launch price, since these guys couldn't sell. So is it
Well, I mean, the
basically
value of ETH goes
to
down
fund
as
the
well.
app development? No. Like I'm not even looking at ETH. This is just
No,
if it's
that's
an
not
ETH
true.
chart, the value of ETH
No,
doesn't
that's
matter.
not true. So hold
Yeah,
on.
the
Let
project
me
has not
try
sold
to.
any. Yeah, the project
So
has
let me
not.
yeah. Let me try to explain this. We are emitting tokens, right? So there are more tokens in circulation than at launch. There's roughly 3x the amount of tokens that we launched with out there. So all those tokens are given, like I mentioned before, the way we deliver our interest.
And I'll continue the
Deposit.
conversation. Okay, there we go. Yeah,
Oh,
Mr. Mercier, you
am I
disappeared.
muted?
Yeah, you disappeared there for a second, and and you were basically, I think, saying something about like whenever someone puts money into the liquidity pool, they earn NUME, and they can technically sell that, or someone sells.
And now
Okay,
that
so
we
it's
have
the
our
APY part of it.
Yeah.
right. So all these NUME those are new NUMEs that are bought on market or given as rewards. Those are what's being sold off right now.
And this is the ecosystem 20%. Is that what that is?
Yes.
Yes. In addition to not the ecosystem. It's not the ecosystem wallet that's selling. Just to be clear, right? Because that would be the project selling. No, it's none of us. It is the rewards that we give out that come from either the treasury or the ecosystem, going to users of our vaults. And just to reiterate again, right? The vaults generate yield in 2 ways, right? We generate yield on the base asset, increase the principal deposit, but we also give NUME tokens as an extra. We add those as rewards to give extra APR essentially, and so the users of the vaults are the ones that we can't stop anybody from selling their rewards, and in fact, that is happening now. But because of the way we've designed our tokenomics to incentivize against selling of rewards, that's what's keeping our price pretty stable, actually around the 4 to 5 cent mark right now, because users are staking their NUME instead of selling it, so that they can again, NUME stakers earn revenue share in the form of ETH. And so that helps protect the token value, and that helps make the price more stable.
So can you give me an approximation? What's like the APY? How many, like when they were using this ecosystem, or they were getting the rewards, how many tokens or the percentage of tokens that have been earned? And like, what's the AP? You said 3x the tokens, 3x is what it was at launch, right?
Yes, roughly.
And so that was all just for the staking part of it?
Not for staking. That's for the vault rewards and the LP rewards, right? As well as a little bit of that NUME that gets added to every NUME holder's wallet whenever transactions are done, because we do use the reflections model, right? And in addition to that, it's the extra that goes into the LP that represents an organic buyback. All these different mechanisms that we saw as traditionally associated with kind of meme coins, right? The reflections model has been kind of given an unfair rap, in our opinion, because a lot of the meme coins and the pump and dumps use that model. But we saw there's tremendous value in having reflections taxes. And so maybe let me back it up a little bit. What is a reflections tax? So what we do is we charge a 9% tax on every transaction, right? Every buy and every sell of the NUME token. And the way that gets broken down is 1% of that, one of the 9%, 1% gets sent to our LP, right? So that ETH that is generated through the tax gets turned into NUME. Well, some is kept in ETH and some gets turned into NUME and gets put into our liquidity pool on Uniswap V2. And those LP tokens are burned. So the 1% LP injection that we get through the reflections tax is forever. It's locked forever. We send another 4% to the wallets of every NUME holder. So whether you're holding NUME in your wallet or you're staking it, you're sharing in that 4% distribution. So just by sitting there and doing nothing with your NUME, if it's in your wallet, you earn more NUME over time. Or if it's staked, you know, it's kind of like it's in your wallet, you earn more NUME in addition to earning the revenue share. And then we send another 3% to our marketing fund, and that represents our development costs or our marketing costs, right? So that we can be operational and we can pay for marketing, which is incredibly expensive. And right now in this current market condition, it's very inefficient to spend on marketing. So we haven't been spending too much. And then another percent gets sent to our dev fund, which funds development. And so the reason we've done this is because that represents a source of revenue for us today, for now, right? Until we can generate enough revenue off of the yield in our vaults, we do not want to sell the tokens. Most other DeFi, 99.9% of DeFi projects, the way they fund themselves is they sell their own token. I mean, this applies to all crypto projects, not just DeFi, right? The funding comes from selling the project selling the token. And what that does is it creates a Ponzi-nomics kind of incentive structure. The only way to keep the price moving up while the project is selling tokens is to bring in more folks to buy the token to offset the pressure, the sell pressure from the project that's selling the token. And we wanted to get away from that. So we realized that, hey, this reflections tax model, this is actually not being used properly. It's being used to generate only hype and not actually deliver product. What we can do is use this as revenue to fund ourselves operationally, infrastructure, development costs, marketing, promotions, contests, giveaways, stuff like that. We can use that so that we don't have to sell the token to fund ourselves, right? And so that creates a new kind of incentive structure where the project is incentivized to increase the awareness around the token, to increase transaction tax revenue, and it aligns that with that incentive with all NUME holders, because they want to see the price protected. If not, they want to see the price go up, right? But they also want to be able to participate in the yield generating products that we have, which increases another revenue stream, right, that we have. So it's essentially our system to help not just protect the price, but also to help us be able to get to revenue positive just on our base revenue performance fee from our vault yield.
All right. Okay.
Some years ago, I'm sure you guys have heard of it, was in the project called Chainlink. I was an investor with them. And I remember that, this is years ago, is that as the coin price would go up, then it would just start toppling down a little bit. This is nothing against Chainlink. I love Chainlink, but I'm just saying that I think it's Sergey or something. Then the project would sell like 30 million of their coins, and they would justify it, and they would sell every 2 weeks or something, and then the price would drop down again, and they would justify it as development costs. Basically, what we've created here is a solution where we don't have any need to sell NUME, so that the price continues to go, and just those reflections create enough revenue not only to satisfy our dev and marketing needs without having to break the coin at all and hurt the project whatsoever. And on top of that, a big chunk of that revenue for anyone who's staking the coin goes back to the staker as Ethereum. So therefore, creating another environment where all other in DeFi projects, the rewards, whenever they would come in the native coin, then after that, what do you do with them? You've done all these different things to earn these rewards. Now they're just sitting there. You sell them, and you sell them into ETH to do whatever else you want to do. But we've solved that issue. No, just stake them so you can earn the ETH directly. So no one's kind of looked at it this way. And we've kind of closed those circles out where the project will eventually, once this starts going, the NUME coin price will continue to grow and grow because there's no project selling going on. And ideally, most reward people that are earning their rewards from the vault strategies or from LP, etc., are simply staking those NUMEs back in because they're happy earning the Ethereum. And they can sell Ethereum all they want because
one thing I wanted to clear up, because you're saying about you don't have to sell it all in reflections. So normally, if it's just reflections, if it's the tokens that got taxed from, like, let's say someone was selling, and part of those tokens are the reflection tokens, they get sent to you guys, and you basically sell those tokens, those reflection tokens, to fund development. Then yeah, that wouldn't really cause any extra sell pressure because those tokens would have been sold anyways. But instead of the seller getting all 100%, they're maybe getting 95%, and you're getting the 5% in tokens, which you can then sell. But
and we're getting them back as ETH for the part that we need. And the other people and we're also keeping the wallet holders happy because of those 9 pieces. 4 pieces are going back to every single wallet holder, where only about 4 pieces are going back to us as ETH to run the costs and also to revenue share.
But let me ask you this: to get the ETH, what's buying the ETH? Like, you have to sell something to get the ETH to reward the ETH.
No, the smart contract knows. So, for example, whenever someone makes a purchase to purchase the NUME, the tax portion, the smart contract already knows to not turn that much. That's the tax, right? And just keep it as ETH, and then move it over. That micro.
Wait, are
portion.
we talking about the revenue share, or are we talking about the reflections? Because the
reflections. Okay. Yeah, on the reflections. Correct me if I'm wrong, Mr. But he's asking how are we getting it as ETH? So whenever someone's making a purchase on Uniswap, they're purchasing with ETH. So when that ETH is converting over to NUME token, the smart contract knows that, okay, this much goes back to NUME to the wallet holder, this much in NUME goes back to whether it's to the LP or as a reflection back to all wallet holders, and this much in ETH, not in NUME, because the original transaction amount is ETH itself, is held back so that it's part of the taxes and comes back to the project in ETH. Then we can use that ETH so that we don't have to burn the NUME coin itself, and then the rest we can do the revenue share with, just for stakers.
Yeah, okay, I understand. But I also want to talk about how you were saying there's 3x more tokens in circulation than there were at launch, right? So you mentioned that the guys who are holding the private sale tokens, the early investors, they can't sell, but they're still getting the tokens, right? So can they sell the tokens they're earning?
They're not getting any reflections. All of those coins are outside of reflections. No reflections have been blocked on them.
So you basically have to buy the token at launch to get the reflections and the rewards.
Let's keep it as fair as possible. Yes.
Okay. And what about for the dev team and the marketing? Because you said you're not selling these tokens, but so basically these wallets are earning the revenue share, the reflections, and they're basically the way you guys are funding it is from the selling the reflections that these wallets are earning, right?
No, the dev team and the marketing are earning reflections. They're just sitting there. The project's not going to sell anything or at least don't quote me, but the project does not want to sell anything NUME coins. So the marketing or the dev wallets count as any other wallet. So their reflections will also be coming back as NUME. So we're not doing nothing with those, not because we don't want to sell NUME. No, we want to create an avenue where no one wants to sell their NUME. So the money that we're getting, it is going into the marketing and dev fund, not to the wallets, but into the fund, which is coming back from the buying and selling activity And those are the reflections that when the portion that's coming back in ETH is going into the marketing and development fund, and it's coming back as ETH. So that's what, if we need to utilize and pay expenses and stuff, or of course for staking revenue shares. So those wallets are not, they can accrue it, but we don't want to sell the NUME because they're accruing in NUME. So it's just accruing, but that doesn't mean anything that we're selling.
All right. Okay. So,
and it's important to remember that, you know, we're so early in this project that we want to foster the growth of it, right? And that's selling right now would be, in our opinion, a mistake, right? And it would hamper our ability to grow. But at some point we will turn revenue positive, and, you know, maybe we shouldn't have called it the marketing fund, for example, because we're actually not using those tokens to fund ourselves. It is all through the ETH that we generate through the revenue, the reflections taxes, and that's what we use to fund ourselves, with the ETH, not with the NUME tokens itself. And so once we do get revenue positive just on our vaults, the plan is that we can reroute any tokens, taking into consideration any supply dilution mitigation that we have planned. What we're planning to do is turn down the token tax, right? The reflections tax, possibly to zero. We may keep, you know, maybe a 1% for the LP or something like that. But then also reroute the tokens that we have in various funds to give out as emissions, to give out as rewards, right? So that we can continue to support a high APY, a high APR.
Absolutely. Whatever we want to do it so that it's perfect and it's right and it benefits the project.
I hope that makes sense.
So help me understand, let's say I was a holder, or I bought at launch price around 5. And if I was doing all those things, getting the APY, getting the rewards, the reflections, and all that, basically just in looking at the chart, I would actually be down right now. But you also mentioned that there's about 3x more tokens in circulation than there was prior. So do you have a number, roughly how much tokens I would have if I was doing all this since launch? Would I have like 2x, 1.5x tokens? Or would it be like 3x amount of tokens? Which in that case, I actually would have been at a profit. Because if I had, 100 tokens at 5 cents, now I would have 300 tokens at 4 cents. That's still a very positive net profit, right? So I just want to kind of get an idea, like if people that are holding since the beginning, like how many more tokens they would have gotten since they bought.
So what I don't have the math offhand, but essentially it isn't related to the extra tokens that have come online. It's related to our trading volume, right? So if you take our aggregate trading volume since launch and you take 4% of that, that is what represents that's shared among all NUME holders. So to get an understanding of what that increase might be, you'd have to look at how many NUME are in circulation. Well, really what you want to look at is how many NUME are in wallets. And we would distribute, what you do is you would distribute the 4% of the transaction of the trading volume all across all that circulating NUME. And then you'd have an idea of how much each NUME earned in NUME since launch, if that makes sense. But sorry, I don't have a number offhand. That's a really good question, though. We should.
I'm just wondering because I'm still kind of curious. It's still hard for me a little bit to understand the 3x in circulation. Like, where did it go? Where is it sent? Who has it? Right? Because, like you said, these guys are not getting any reflections. These guys are not getting any reflections. They can't sell. These guys can't sell. These wallets aren't selling. So the 3x amount of
maybe
tokens.
Let me try to re-explain the where those tokens come from, right? So we launched with, I think it was somewhere in the neighborhood of like 12 million, 13 million NUME tokens. And the only tokens that were in circulation at the time of launch were, because everything else is locked up or behind multi-sig. The only thing that was on the open market was in our Uniswap. Essentially circulating supply. Oh, can you guys hear me? What is going on with my connection? Is it me? Is it?
I think
so. You dropped out a little bit.
So sorry. So we started off with our initial circulating supply, right? And that. Oh, I think there's an echo.
I think
somewhere.
Ms. Sam, can you yourself?
Yeah.
Oh, I think it was echoing on your Misam.
Yeah, Mr. I think you have a lot of static. A shirt, maybe it's your shirt or something. I don't know, but
It's the tunnel.
Yeah. So I mean, I'll still let Mr. speak to it as soon as he comes back to online it. But I just wanted to kind of give you a thought on this, Boya, that I would imagine. Don't quote me again. That they would probably be well over 3 times if what you're asking if you're correct. If you go back to our app on our Vault accounts, our Vault's current APRs across the different levels, the USD is giving 58%, ETH is 197, CVX is at 272, TriCrypto is 236%, and Frax is at 44%. So if you're talking about someone that was early, you may be talking about what Mr. was talking about to the volume side of it. But if I'm understanding your thought process on this side, is that and they got into the walls or into the LP. I can't check exactly what the LP double up is giving out, but there was a time that these were like 2, 3, 4, 5,000%, because it has to calculate based on users coming in, and they started earning new NUME rewards. So any person that's been participating from the very big time has definitely is, in my opinion, in a very, very positive situation, because they're earning those NUME coins because of those really juicy APRs that came. And then, of course, they dwindled down, and they're still really nice, 200-300% APR even right now on the Vault strategies of their earnings, and they're earning new NUMEs. So what we're also trying to educate them is to try not to, of course, sell it, because as the staking and the ETH rev share comes into it, more and more people staking, so that there's less and less. There's still going to be some sell pressure, but less and less of it as our staking is continuing to grow nicely. So to kind of, without playing with real numbers to give you an actual number, I would think that if someone's been there in the start, they have 3, 4, 5 times the amount of NUMEs that they probably got into it if they were using these strategies that are giving out these emissions.
Oh, I would say even more than that. If they're in a vault and they've been early in the vault, or they were an early liquidity provider, we're getting reports of folks earning like 12,000 NUME per day, for example. So that would give you a chunk of that circulating supply, that 3x of those tokens that I think you're looking to account for there. And we should also add that we do have a token swap that's limited to only holders of the Yaxis token, right? And that was part of the merger, right? So that we Numisme could acquire the rights to use the intellectual property, right? We did think it was the best way to make sure that that community was taken care of. So what we offered them was basically a drop of tokens, and all those tokens are sitting in a contract, and they're being vested daily over 180 days. And that also counts as circulating supply, right? So we have a bunch of tokens sitting in our rewards contract for the LP. We have a bunch of tokens sitting in the rewards contract for the vaults. And then we have a bunch of tokens waiting to be dropped on Yaxis holders, right? And across all those three, right, that accounts for the increase in the token supply. Does that make it more clear?
Yeah. That's kind of what I wanted to figure out, basically. So
okay, yeah, good. Yeah, sorry for the confusion.
It's kind of like the summary is basically the early buyers or whoever bought the tokens. So not these guys, because these guys, the tokens are locked, so they technically don't have them. Whoever bought the tokens and was interacting and doing all of the things to earn either like staking or basically what I forgot what you mentioned, the vaults.
Yeah, LP rewards.
Yeah, LP rewards, all that. So most of that came to them, and it was taken out of this basically reserve right here, ecosystem, right, or treasury.
Yes.
Right, and may I add, it's still very early, so it's still very juicy.
Okay, so but it's just important to know that I think the chart wouldn't explain the story in this case, right? Because it looks like people are down, but in reality, if they bought in and they're holding. Maybe their price went down, but they would have 3-4 times the tokens that they were actually, you know, staking and using the vault.
Yeah, probably more than 3-4 times. And so what we're, you know,
Yeah, but your
that
timeline on that is not quite there because that wasn't available at launch. This just came out just several
when
weeks
I say
ago.
right, there are different launches, right? When I say launch, I mean launch of our DeFi products, and then there was the token launch as well. So there are kind of a couple different launches that we're talking about here. So yeah, that's a good clarification there.
All right, cool. So I have one more like major question, and then I'll open to the community. So you guys are doing marketing right now. You know, like you said, it's kind of like a bear market. It's hard. There's none of that DGen money is there. The 8 money where you just like people throwing, you know, crazy amounts of funds at like even the most low effort projects, like it was a year ago, right? It's a lot harder now to make your marketing dollar go and get investors and actually make it even valuable or worth it for what you're spending. And so that's not really a problem because you know devs could always, especially if they have a real project, they could always take that time to work on the actual development and, you know, maybe like just get people to know about it, you know,
Right.
spread awareness, not really, you know, try to pump and dump it or anything like that, but just it's really about, you know, organic growth, you know, word of mouth, spreading awareness. So I don't think it's really big of an issue. Just like you have to be more careful with the money you spend on marketing. So my question is, we're at this stage right now. It looks like the bottom was 3 cents, which is kind of predictable because from my experience, when investors or private sale has a certain price, it usually always at least hits that. So if it's like 2x, 3x lower than, you know, launch price or pre-sale, it tends to go. But in this case, it probably wouldn't really had no reason to, other than the fact that maybe because people are getting tokens and they have 4x tokens, because these guys, like you guys said, did not have those tokens released yet, so they couldn't sell for profits. So I think the only reason why it is lower than, you know, instead of chart going up is probably because of, you know, people getting more tokens or reflections, and some guys are taking profits, so they're selling their tokens. But like
Yeah,
you
And
said,
also the
they were
market
holding
too. Yeah, and
the
also
market.
the
Yeah,
market. Yeah, because everything on our token is Ethereum based. Ethereum price goes up, token price goes up. Ethereum goes down,
yeah,
it's
yeah, yeah,
locked.
yeah, yeah. If you're looking at USD, which is this one is, then yeah, that's true, of course. But if you look at Ethereum, Numis versus Ethereum, then it's slightly different. But yeah, that's like it doesn't matter too much because the thing is, Ethereum also when the Ethereum's dropping, the whole market's dropping, and then people are pulling out too. So just because
Yeah, and you know, you make a good point about, sorry to cut you off there, but I want to get this out of my brain before I forgot it. I think, you know, the difficulty of just the bear market, right? We see that as an opportunity because we do have the ability to build and continue to be operational in this market. And that owes to just our approach to everything, including the way we deliver yield in any market, right? But, you know, we see it as an advantage because while pretty much every other DeFi project is suffering, and you know we're seeing DeFi projects just close up shop, you know, left and right because again, when the token price tanks, that's their funding, and they can't fund themselves, and they have to stop doing what they're doing. We are in kind of a lucky position to be able to continue to build and continue to put out products in this bear market and get everything ready for that next bull run. Because if you look at all the biggest projects in DeFi, and certainly they're all the blue chips, you know, most of them were built in down markets. They were built in bear markets, and they're doing what we're doing, right? They're focused on putting out product. They're focused on doing it safely. They're focused on building things the right way so that as soon as that bull market comes back around, everyone starts to win in a big way, right? And then we become a blue chip. And so that's basically our strategy here. And I want to touch on just one other point, you know, the ability for us to be able to generate positive yield, even though the token price might be down, and sure, folks that got in early, they might, you know, have bought in at a higher price, but because we can deliver positive yield, they are actually in profit, right? Whether it's because they sold the rewards, or maybe they are, you know, just seeing their initial vault deposit increase in principal amount, right? They are in they are in profit. So one of the ways that we're really excited to be able to continue to deliver returns, right, deliver interest essentially to investors is, and users, I should say, right, investors, users, is our LP Double Up program. And the LP Double Up program, for anybody that's interested in becoming a liquidity provider, usually a regular LP program would require that, say, someone that comes in with, say, 10 ETH, right? And they want to provide liquidity to us in return for getting NUME tokens as a reward. They would take that at 10 ETH and give it to Uniswap. Uniswap would take 5 ETH and turn it into 5 ETH worth of NUME, right? They would swap it. And then the other 5 ETH that stays in ETH, they would pair it up together and put it into the pool. So at that point, you have a 10 ETH in value in that liquidity pool. And so that would essentially earn rewards at that rate, right? You have 10 ETH worth of liquidity and you would earn NUME tokens against that amount. Now, what we're offering is for somebody with 10 ETH, we're saying we will double your position for you for free, right? And that is why we call it the LP Double Up program. If you bring us 10 ETH, we will match the 10 ETH with 10 ETH worth of NUME and put that into the LP on your behalf. And essentially you would now have a 20 ETH liquidity pool position, and you would earn at 20 ETH worth of LP tokens. That's how that you would basically double the rate that you would earn the rewards on, right? And then once they want to withdraw, they basically, we split the pool in half with them to mitigate any impermanent loss. We give them half the ETH that's in the pool and half the NUME, and then they can do whatever they want. And the entire time that they're in the LP Double Up program, they'll be earning those NUME rewards, right? At a faster pace. They can do whatever they want with those NUME, right? We would love it if they stake their NUME so that they can earn ETH in the revenue share. But they can do whatever they want with that, with those NUME that they earn as rewards, right? So we just launched the LP Double Up LP program. It is in beta, so it's invite only, but we encourage everybody to apply. We've seen some good interest. If you are interested, Aaron, maybe we could drop a link to the application form. It's just a Google form. We just want to get to know you. We want to make sure you're not trying to, exploit us, and we'll onboard you into the program. But yeah, that's one of the ways that we continue to deliver returns, right? And another way that we'll soon have is our Pay Me self-repaying loans, and we call it Pay Me because we actually pay the user for using that product. The way we pay them is we pay their loan back for them. So the way the Pay Me self-repaying loans product works is if you bring us 1,000 or 10,000 or 100,000, let's just use 1,000 for easy math, right? If you bring us $1,000 in stablecoin and put it into the Pay Me self-repaying loans, what we do is we take your $1,000 of stablecoin and we put it into our stablecoin vault. And instantly, when we do that, we can give the user up to 60% the value of their deposit as a loan, as a stablecoin loan. And so if you bring us $1,000, you can take out up to $600 and do whatever you want with that. Go buy some NUME with it, go buy some shoes, whatever you want, right? And over the course of a few years, we will use the yield that we generate off the $1,000 deposit, and we use that to pay the loan back for the user. So it's not just an interest-free loan, but we pay it back for you so that at the end of a handful of years, you get your initial $1,000 back, right? So if you had never spent your $600 loan in the beginning and you're sitting on it, once we pay back your loan and you get your initial deposit back, you get $1,600 back. Right? And so that's what we're super excited about too, because not only does that help us generate more revenue because we're putting the collateral to use, but it gives folks an opportunity to borrow against their future yield. If they don't want to wait for their rewards to flow in and then maybe after a few months they do something with it, if they need that liquidity now, but they don't want to decimate their stablecoin holdings, bring it to us. If you don't need all $1,000 right now and you only needed 500, why not bring it to us? Give us the $1,000. We'll give you 500 right now. You go use it as you need. And as soon as we pay that loan off, we'll give you that $1,000 back. It's as if you got to do whatever you wanted for free with with the 500, the $600 that you took out in the beginning. So sorry, just wanted to make sure that was out there, because we are super excited about those products, and we're so close to launching the Pay Me self-repaying loans that I just wanted to make sure that everybody was aware that is something that we're doing.
Okay, awesome, guys. All right, so let's wrap it up. We have an actual private sale coming out in 30 minutes, so let's go open to the community for a couple of questions real quick.
Sure, yeah. Who's out there? Who has a question?
Someone had a question. How many tokens issued every day?
That is, we are emitting something like, I don't have the number right off the top of my head, but hold on, let me run the numbers for you real quick. Should we do another question while I look into this number?
Yeah, any more questions, guys? This is why crypto. This could work just as fine without any crypto element involved.
It's actually 0.192 NUME per second. So whatever that comes out to, 0.192. So say 0.2 per second.
Actually, so this question about this could work fine as without the crypto element. Like, yeah, I mean, to be perfectly honest, the reason why like the app was available and then taken down to be reimagined and re-engineered is because when this project first started, when they first applied for the patent back in November of 2019, for the provisional at the time, this was meant to be just a Web2 project at the time. I mean, Misem and Jay, the founders, they were in crypto, but the first innovation, first and foremost, was his idea to electronically transfer your physical change back to you, digital, and into digital form. So that aspect with the peer-to-peer aspects and the connection of a bank account put back in your savings and stuff, that was all initially the plan. But being in the space and continuing to learn more about the space, have more interest in the space, it became very quickly realized that the capacity this project has to combine both these worlds and bridge the gap and to create something that was also an investment tool, not just a financial tool, and just expand that option, expand that choice, and give people that capability, just made the app and the project that much better. So it's not that it couldn't be done on its own, but we think it's better this way. And considering, you guys are here in the crypto space, I mean, we hope that you feel the same.
And we could do it without the DeFi part of it, right? But the DeFi part of it actually adds so much more value, and we wouldn't be able to pull this off without our own token with our DeFi products, because again, a lot of the way we generate the interest rate, the APR, is by giving our token as a reward, right? And so without that, sure, we could do it, but we wouldn't be as market competitive with our rates as we are today, right? And I should correct myself. I don't know why my math was wrong. We do have about 16.5 thousand NUME coming online every day to Vault users, and about that same amount going to LP stakers. So the number I gave you before was wrong. Sorry about that. But I did give Aaron a link that goes to our DeFi app, and that'll show the rate of rewards emissions that are going to Vault users currently.
Any more questions, guys? There's another question. Will you launch in international markets?
Yeah, that is our long-term goal, right? We are super focused on making sure that we do it in closer to home and locally, and home for us is in the US. But we are talking to retail partners that have global footprints, right? So the way that we would like to, and certainly actually in the discussions we're having with our retail partners, this is likely the way that they would want to roll it out first, right? Start not just in the US, but start within maybe a smaller region of the US and roll it out as a test. But both we and our retail partners would want to focus on the US market first and then branch out. But the great thing is that once we're in with these guys, they have the reach, they have the global footprint. So we just rinse and repeat the same approaches we used here in our home market and bring it abroad. The one thing we can't control for are regulatory environments that are vastly different from our own in some countries. But for the most part, we do have intentions on bringing it to the globe, launching it around the world. Yes.
Yeah. And the DeFi element is already international. So our DeFi.
That's a good point.
Yeah, the DeFi element's already international. And as far as the other side is, we start with the big boxes here, and then those big boxes have global presence, as Mr. said. So then it would be them themselves moving that out so that the app side of it is available into wherever they have footprints. But then again, back to the DeFi side, there's no borders anyways.
Right. There's no KYC. We are permissionless. We are non-custodial. So you always own your asset. So if there is a question about, how are we different from a Celsius, or how are we different from a Three Arrows Capital, right? The reason we're different is because we are non-custodial. What that means is we never take ownership of your assets, right? And the way that Celsius did it was they said, hey, give us your money. Literally give it to us. We'll hold it for you, and we'll give you like 8 to 12% interest on it. But we won't tell you how that's being done. And it turns out the way that they generate their interest was very high risk, right? And for us, we even if we wanted to, which we don't, we could never do that because we cannot control the user's funds. We have to ask for permission through our DeFi app to interact with your funds. Then we have to ask for another permission approval to route your deposit into our yield strategy. And these are all smart contracts that are multiple audited, right? We're really proud of our audits because one of the ones that we did was with a distributed decentralized audit firm called Code Arena. And they found so many findings within our code that not just related to smart contract security, but also user experience and gas optimization and just kind of code hygiene in terms of documentation. It made our code stronger, right? We patched all those findings. We were able to, it took us a little bit of time to do that. So we moved a bit slow in that process, but we came out of it much stronger, right? And that, I think, is how we're able to make sure that you will always be able to withdraw your funds, right? Even if the worst happens and, let's say our website servers go down. Even if our website servers go down, your funds are yours on the blockchain, and you can always retrieve them on the blockchain. Whether it's maybe, if it's on Ethereum, then you would use the Etherscan block explorer and just interact with the contract directly, connect your wallet and click withdraw, and you can have your assets back even without our website, right? So we can't block withdrawals ever, and we are always transparent about how those funds are being used because you have to give us permission to use those funds in our yield strategies.
All right, awesome, guys. By the way, we have to wrap it up. So you guys want to do the final statement?
Yeah, for me, and I'm, I'll leave it to Misan for the final words, but for me, I think my final statement is we are super long-term, right? We're not looking to do this in 6 months or even a year. What we're trying to build and what we're building towards will take years, right? But that doesn't mean that there isn't value today, right? Because we have our DeFi products online, you can start earning today, get exposure to the NUME token today. And while you're waiting, coming along with us on this ride, on this journey, you might as well earn on your digital assets along the way, right? So eventually we will become that first DeFi project that brings real world utility to the mainstream consumer. But until we get that to that point, you can get into our project now, you can get into the NUME token now, and you can certainly earn on your assets like ETH or CVX or even stablecoins, right? Like MIM or Frex.
All right, thank you guys. Amazing AMA. I think it's a very solid project. So at this point, it's really just about deciding when to the right entry, right? And the earlier you enter, the faster you can start earning tokens. So it's basically going to be like tug and pull about getting the price to go up, getting the tokens, and how many tokens you're going to get as an investor, and if the price is dropping. So just because a chart might dip doesn't mean people are losing money, because they might be also getting a lot more tokens, right? It's kind of like the example I use. Let's say something dips 50%, but you have double the tokens, you're breaking even. But if you have triple the tokens, you're making money. So it's really going to come down to that.
That's a great way to put it.
Yeah.
Yep. Yeah, sounds good, guys.
Thank you for having us.
Yep. Thanks, guys. And everyone here, please join their group, join their Telegram. Great AMA. I'm definitely going to be keeping an eye on it and looking to invest, because it's one of those projects I think that you could just kind of like set it and forget it. The only thing is, I'm not sure how active you have to be. I have to look into that with all those different avenues of generating tokens. If it's just set and forget, or you have to actually be using the vaults, and like how often you have to use it. And
oh no, it's set and forget.
Okay, that's awesome then. All right, sounds good, guys. I'm gonna end the recording right now, and I see you guys.
Yeah, thanks.
Thank you.
Thanks for the opportunity, and thanks for the chat. It was great. We look forward to doing more with you.
Yeah, thanks, man. Yeah, for sure, and we could definitely help you guys out. Also, getting the marketing fine-tuned, making sure money's not being lost with all the fake marketers out there.
Absolutely.
Awesome. Yeah, we'll take you up on that.
Thank you, guys.
Nice.
Bye, guys.
All right, thank you.
Bye. See ya. Bye.